Hello everyone, this is Ryan with Numbers Up Finance, and today I just want to do a quick market wrap video for Tuesday, February 5th, 2019. Here I have SPY. This is the S&P 500, an indicator of how the market performs entirely. And I just want to take a look at or assess what I believe to be a very good objective shorting opportunity for a good swing trade. And though I've said that the past couple weeks during this bear market rally, or what I believe to be a bear market rally rather, though I've said that many times, the case still holds. There's always a chance that an objectively good opportunity can become foiled, and we've seen that the past couple weeks. But let me just go through, I'll list a couple reasons and make a bearish case for a nice swing trade moving forward. So today we peaked around 273 today, slightly above 273. We hit a high on SPY, and then we started to see a big sell-off, to which we rallied back to at the end of the day. But if we look at 273 price point on the 1-year, 1-day chart for the S&P 500, we can see that there is some overhead resistance here. So if we look back, we had a couple tags on this 1-year, 1-day chart, some consolidation right here, and some a little further back. We can see them. We also had a slight gap below, served as a reaction point as well. But in addition to that, we also tagged off of the 200 daily SMA today. I believe that that is significant overhead resistance for SPY itself. Even though we pushed right through it on the 280 triple top back here, we still cannot count out how significant the line is, because it served as strong support prior to breaking it back in October 2018. So it's totally possible that we push right through this point, as we've seen happen the past couple weeks. But we do have some strong overhead resistance here. We are completely overextended in a momentum sense and about to be oversold on the RSI. A lot of indicators are pointing towards a pullback and a nice swing trade setup. If we actually move to the 4-hour chart of SPY as well, what we see are some divergences playing out as well. So again, divergences, we have an increase in price over time, yet our momentum is actually making lower highs. Although we are on the verge of actually foiling this bearish divergence on the 4-hour chart, it's still holding nonetheless. The RSI on SPY, we can see here a very nice bearish divergence playing out over time. Have some room until we tag that point, but again, it's highly probable that this divergence plays out. And again, we've been overextended, but it's setting up for something a lot bigger, a very nice pullback. And being this overextended, it's like a rubber band. We know the harder you extend it in one direction, the harder it's going to snap back in the same one. So we could get a very, very intense snapback rally here, pullback rather, and it could happen very quickly and be very, very extreme. And given the overhead resistance, divergences on the 4-hour chart, and overextension, I think we're overdue for it, and I think we'll see it happen to close out this trading week. And if we move over to QQQ and we take a look at the 1-year, 1-day chart as well, again, same story. Overhead resistance point around 171, multiple tags. You can just go ahead and see them yourself. I mean, we got a tag here, a tag here. We have a gap below here, which, again, we reacted with it. A gap below here as well, and we reacted with it. We cannot count out how significant this point is on QQQ. And then you just toss in with that we're at the 200 daily SMA. I mean, that's almost double dipping it. Incredibly strong overhead resistance. I would be very surprised if we just pushed right through it as if it wasn't there. Now, we had this downtrend line on QQQ. As opposed to SPY, QQQ does not have a triple top. Rather, it has a pretty significant downtrend line forming, and we melted right through that. So could we, going forward, push this, test this resistance, tag off of it, and then actually back test this trend line is a very favorable scenario of mine, because that would be, get you the numbers on that, it would be about a 3% pullback, which is pretty realistic, because not only would we be back testing that trend line, but we'd be hitting a support level as well. So should we see a 3% pullback on QQQ over the next couple days, watch this downtrend line. We could be back testing it and actually set up for something a lot bigger moving forward. But that's a lot longer term stuff that we're going to cover another time. In the meantime, we have a very good swing trade opportunity set up here. And if we look at the 4-hour chart as well, like we did on SPY, pretty much the same case. Now, our bearish divergence on QQQ was actually foiled a couple days ago momentum isn't playing out the same way. But if we look at the RSI, again, over time, we're pretty much at the line right now. Our divergence is incredibly strong. It doesn't necessarily have to play out on both indicators. Each indicators are important, but we see it playing out on one. We see the heavy overhead resistance. We can pretty much formulate that we are likely to see a pullback for a nice setup. And again, if that gets foiled, well, if we're at this nice of an objective short, you're likely to have a pretty low stop loss nonetheless. So that's part of what makes it such a good objective short. And after looking at the indexes, the NASDAQ 100 and the S&P 500, I just want to finish up by looking at the VIX, the Volatility Index. This is the future. This is /VX. We can stick at the 4-hour chart actually. This is the Volatility Index. The most important thing to know with this is that it performs opposite of the market. So we know that when the market's moving up, this is moving down, and vice versa. And you can just see that intuitively right here. I mean, we had a high on Christmas the same way we had a low in the market on Christmas. And ever since the market's been pushing up, VIX has been falling down. But what do we see right now? We are at an incredibly strong support line that has been tested multiple times in the past couple months, 3 times for that matter. Also pairing that with the 200 daily SMA and the 100 daily SMA as well. So we cannot count out how significant of a position this is. And if we partner that, actually, we have divergences on the chart as well. And we love to see that, Not only do we have strong support right here, but we have incredibly strong divergences playing out in the 4-hour chart. And that just helps the bearish case, rather, push up for VIX. Even if we look at an ETF of VIX, this is TVIX. This is a double leveraged ETF you can trade on basically any platform. It'll let you trade the VIX indicator itself. Incredibly fast movement. It's a high risk, high reward position. But I know we're not supposed to exactly do our analysis on the ETFs. But if you're to set up targets with it, which I have placed here, are green lines of the targets, and you can just intuitively see how likely we are for a reversal. And we're overdue for one at that matter. So we have our bullish divergence playing out in the momentum. And if we just go and look at this trading range we've had formed over the past couple months on this ETF, every time we approach this yellow line, what we see is a tag off of it and an explosion. We see a tag off of it and then an explosion, a tag off, and then a heavy explosion here. And what did we do today? We tagged right off of it, and that means we're likely to see an explosion. And if you go back even more and back test it, you can see that when these explosions are happening, we have bullish divergences to partner it. We saw that back here on December 3rd. We tagged the same line we're tagging now. We had the same bullish divergence we have now, and then we followed that with a massive breakout. And, this was, to jump from a $34 price point to an $86 price point. Now, I'm not going to say that's going to happen again. That would just be unrealistic. I mean, the market hit lows that it hadn't seen in a while at that point. I'm not calling for that again in the short term, that is. But even if we hit one of these targets, a 42 price point, a 55 price point, whatever it might be, which it's hit every time it's bounced off of this line, mind you, we are seeing a very good opportunity, and I'd consider trading VIX the same thing as trading a short because, again, it performs inversely to the market. So other than that, we see a lot of things going for the bearish case. That's pretty much going to wrap it up. I know we've had inconsistency. I know that we've seen some good shorting ops the last couple of weeks, but there was a lot of noise last week. Don't forget things like massive earnings reports, FOMC meetings, and job earnings reports. Those all foiled a lot of good shorting opportunities, which happens. You can't really ignore an FOMC meeting. Earnings reports are obviously going to fluctuate the market heavily, and we did have quite a number of shorting opportunities. I don't want to say foiled last week, but they didn't play out exactly how I would have liked them to. But we have a clear path ahead. We have a very good shorting opportunity ahead of us here. And with no earnings reports, no news, major anything coming in, all that stuff, it just makes it a good setup. So that pretty much does it for me. This has been Ryan with Numbers Up Finance. Make sure to keep your numbers up, and we should be back with videos more regularly from this point forward. We apologize for the gap in it, but I hope you guys have enjoyed watching, and happy trading.